Hey guys, and welcome to the Working Money Channel. All right, so we got Ted Pillows here saying the BTC 4-year cycle might be over now. Guys, what does he mean by that? The reason, he says, is no euphoria or blow-off top price action similar to last cycles. Also, liquidity is expected to substantially increase in Q4 and Q1 of 2026. He thinks Bitcoin might extend the rally into 2026 and could establish itself as a true macro asset. So right now, we have not seen that euphoric blow-off top. But guys, that is not to say that it still won't happen. Remember, it is only still October the 10th if you guys are watching this video on the day that I'm releasing it. But what he's showing here, I mean, if we do look at the typical 4-year cycle, 14 bars. This is on the monthly. So 14 bars. Well, that was the first one. Everyone after that, 18 bars in the 2017 bull run and 18 bars in the 2021 bull run. What we are to expect, I guess, is 18 bars. And if it does extend into 2026, that would mean, well, the number of bars would increase. I don't think I'm going to write this off quite yet as an extension to the 4-year cycle. I still do think Bitcoin could move. Currently, one Bitcoin is going for approximately $121,500 per coin. The good news, guys, Bitcoin is still just ranging. So we did see it go lower. We did see it go a little bit lower, but guys, it's still ranging in this range here, not looking terrible. I mean, we did not see, what would be worse is if we saw, boom, this, and then it struggling to get up, and then another huge move to the downside. Now, we are still just kind of sticking in that. And remember, this is the 1-hour chart, so we're just kind of still ranging in that level. If I throw this on the 1 day, and I remove all of that, you guys can see on the 1 day, it's still actually looking quite solid here. So, you know, if we just kind of compare, for example, trends like this, actually, this is a better example right in here. And I'm going to actually just take a bars pattern here just to show you guys. Where's the bars pattern here just to show you guys what we could in fact see. So that is similar to what we're seeing in here, right? Nothing, you know, it's just kind of ranging right now. And the volume is getting lower. Sellers are getting exhausted, as you guys can see right in here. The red candlesticks are getting shorter. The wicks are getting longer. And we got to see what today is going to provide. What we're also noticing is fear and greed still in neutral territory. So we're not really fearful. Market really hasn't moved. In terms of money moving into the market, we're still sitting at 4.13 trillion. That is only down by about 0.5% in the last 24 hours. Bitcoin is only down by 0.61. Ethereum's down by 0.35. XRP is actually up by about 0.25 percentage point, $2.82 for one XRP at the moment. Let's bring up XRP real quickly here to show you guys. $2.82 currently for one XRP. And XRP has maintained this range. I mean, I'm happy that XRP is continuing this pattern and not breaking out of this range. Again, if we do see, you know, this kind of move for XRP, for example, that would not be good. Getting back down to these levels in here after we did all this work back in July. We are hoping for more movement to the upside, and for more information on how I see this market moving, you guys can follow me at patreon.com/workingmoneychannel. That's where I give my 2 cents on the market. We analyze market activity, price targets for Bitcoin, for XRP, and other cryptocurrencies. Check it out. It is only $5 a month, but you got to subscribe and stay subscribed to lock in to that price. Credible Crypto here, giving a different point of view. While XRP continues to chop against the USD pair in a tight range, BTC had a nice impulse off our lows, which sent the XRP to BTC pairing even lower. So this is the XRP to BTC chart. And guys, that is going lower. Remember the other day when I was talking about when we do look at altcoins, what we're looking for is for these coins to hit some sort of support level before we can assume that they are likely going to move to the upside. So XRP is moving in that direction against Bitcoin. That is also a very good signal here. He says, now I'm looking to move down to Gandalf's grave, an historic level where Gandalf the Grey was slain. I don't know what that means. This is news to me, where we may see some strength for the XRP to BTC and ideally XRP to USD once more. So guys, we're also still waiting on that. Colin Talks Crypto also commenting here. It's crazy, but the path on this chart is still valid. What is he looking at? He says he fully expects for this to play out. The target is $140,000 to $150,000 for one Bitcoin. So what he's seeing here, guys, he still sees that a breakout could occur, that we're just going to range for a little bit before that breakout to the upside. He says we're just getting some people selling at all-time high as usual, trying to break even and whatnot. I even called this move on the chart. Brace yourself for the steepest leg of the bull run. Once we decisively make new all-time highs, that is the other thing. We haven't really seen a decisive all-time high for Bitcoin. And as you guys can see here, we have seen new all-time highs. The first time we hit, it was 100 and what was this? 100. The high was 123,200. That was back on July the 14th. Then moving on to August the 14th, we got up to a high of 124,500. And now just recently, October the 6th, we got to a new high, 126,200. But these are not decisive highs. This is tapping, testing former levels of resistance, but not getting up, guys, with conviction. What we still need to see is we need to get up past here, boom, with conviction, getting to new all-time highs, and hopefully we will see the euphoric we will see that euphoric phase once that occurs. He continues by saying this will be where reality hits bears and many FOMO back into Bitcoin, realizing the bull run wasn't actually over yet. This is what I'm hoping, guys. Some more unusual activity, though. Old school Dino coins leading the pumps. This coming from Rob Art, Zcash, Dash, and Litecoin. So that's also interesting. I'm not going to dwell on these too much because I'm not terribly interested in these particular cryptocurrencies. But if you just take a look at Zcash, for example, I don't know why these ones are pumping. Dash, let's look at Dash. I don't know if how many of you guys remember these particular cryptocurrencies, but these are the daily charts, and you guys can see these coins actually on the move. Let's take a look at Litecoin. Litecoin, another one that's doing all right, albeit not the best, but it's doing okay. Anyway, we're going to keep an eye on the market, of course. Unfortunately, we're getting a bit sidelined, guys. Brian Armstrong posting this. We absolutely will not accept this. It's a bad proposal, plain and simple, that would set innovation back and prevent the United States from becoming the crypto capital of the world. The Blockchain Association just posted this yesterday. Very disappointing, okay? A very disappointing proposal outlined by Senate Democrats would effectively ban decentralized finance, wallet development, and other applications in the United States, an outcome that's neither workable nor consistent with American innovation. It goes on to say the language as written is impossible to comply with and would drive responsible development overseas. We urge our policymakers to stay at the table, continue to engage each other across the aisle, and ensure this critical piece of legislation supports rather than hinders our nation's leadership in financial technology. So, looks like Democrats are at it again. AMB Crypto just posted an article with regards to this. So, too big to remain in limbo. This is now what's happening as President Donald Trump advocates for a more streamlined crypto landscape compared to the previous Biden administration. Senate Democrats are pushing back. So the group of 12 Democratic senators, including Ruben Gallego, Mark Warner, Kristen Gillibrand, and Cory Booker, has introduced a comprehensive 7-pillar framework aimed at regulating and stabilizing the $4 trillion global crypto market. The proposal marks the party's most detailed efforts yet to set clear rules for digital assets while also drawing sharp contrasts with Donald Trump's pro-crypto stance. But critics are saying if this is too big to remain in limbo, the plan prioritizes investor protection, higher or tighter oversight, and ethical safeguards. So more of the Gary Gensler, philosophy, ideology there. Why are executives worried? It says here, however, going against Democrats, Jake Travinci remarks, Senate Democrats are trying to kill market structure. A group just sent a counter-proposal to the RFIA and is deeply unserious. He added, these senators claim to be pro-crypto, but what they propose is basically a crypto ban. So more Gensler-era policy in disguise, possibly. All-in critics warn the plan could effectively outlaw DeFi, echoing Gary Gensler's toughest enforcement approach. This coincided with a political standoff over crypto regulation, wherein the House passed the Clarity Act in July to establish clear market rules. So guys, what the heck is going on now? This all happening during a government shutdown too. Jack the Rippler posting this. Congress remains resolute in the determination to pass the Clarity Act by year's end, so maybe there's still hope.
I think we still have an opportunity to get clarity across the line by the end of the year, although the focus and attention is making sure that we get the government back open. There's a lot of ongoing conversations as well about clarity and market structure on the Senate side. I'm actually continuing in conversations with some of my Senate colleagues on that topic throughout the week this week. And so I'm hopeful that as we come on the other side of the shutdown, that we have an opportunity to hit the ground running and have the Senate move forward quickly. And I think the opportunity there is to build on the success that we had in the House legislation. And if the Senate chooses to use the House text as their base text, I think what we have is an opportunity to get this bill still done, signed into law by the end of the year.
So that would be good, wouldn't it? Wanted to thank Jack the Rippler, AMB Crypto, Brian Armstrong, Rob Art, Colin, Credible Crypto, and Ted there for posting those. I mean, we're hoping this was all for naught. A lot of work has been done, and we do not want to see it being unraveled. Luckily, we're invested in one of the cryptocurrencies that is backed by one of the biggest, I think most prominent cryptocurrency companies, dare I say, on planet Earth. Niche Bucks here pointing this out. Brad Garlinghouse, okay, was hired for a reason. He came from Yahoo. He came from an era of the birth of the internet. Okay, winning at being the best walled garden is hard, but winning at the plumbing of the internet, or the IOV, is a totally different game. Ripple has plumbing in more places than probably anyone in Web3, and they keep expanding their tech stack to be the Amazon plus central bank of crypto. And guys, all this is by design. Yahoo didn't win, but the internet did. Individual crypto companies will not win. Most will lose, but crypto will. The key is becoming essential and dominant at the same time. It's not about riding the wave. It's about catching the biggest wave and riding it all the way to another world. It's not quantity, it's quality. To do that, you need to be prepared and you need impeccable timing. This game is not over. This is still in the early innings on the surface, but later innings behind the scenes. Years of plumbing, regulatory licenses, acquisitions, partnerships, new hires, new offices, and pure business wisdom later. And the lessons of Web 1 are being utilized brilliantly in Web 3 if you think macro. People are racking up small wins every now and then, just as they did in the late 90s and early 2000s. Ubiquity is the goal, and plumbing is the fastest way to get there, but plumbing is hidden for a reason. It is not seen, it just works. The key to the internet of value will be, is it hidden and does it just work? And guys, this is exactly what Ripple has been doing this entire time. The plumbing, this is what's important. Even Coach JV bringing this up. New payment rails will exist. The payment rails being laid by Ripple have been in the works for many years, and now Scott Bessent, the Treasury Secretary of the United States of America, is echoing the same.
One of the biggest regulatory changes from the Biden administration to the Trump administration, there have been a lot of them, is our emphasis on AI and digital assets. AI in the Biden administration was governed by diffusion. They were going to treat it somewhat like the nuclear program, keep it in a box. They were going to hand it to Google, Microsoft, Meta, and that was life. On the other side, digital assets had a near extinction event with Wells notices going out to many companies, banks prohibited from opening accounts. And I think the fact that we're creating, the term is sandbox, where there's a lot of experimentation, where there are a lot more offerings, and for community banks not to be locked in that they have to use like one of three dominant service providers, that for a wider range, supply will push down price, choice will inform. Community bankers are, and the owners, whether they're family-owned banks, whether the shareholders are usually in the vicinity, and I think that they will be laser focused on the new technologies. And just like with the credit card companies, I think that new payment rails will exist, and I think we have to make sure that it's open for everybody. JP Morgan, Bank of America may have their own stable coin.
These payment rails will exist, a new financial system, and we have to also pay attention to what's happening across the pond. Stuart Alderati did just post this yesterday, courtesy of Amelie here. The EU was the first major global jurisdiction to create comprehensive rules for digital assets, and nations like Luxembourg are leaning in. Thanks to Luxembourg Finance Minister Roth Gillies and his team for a great meeting last week. Guys, Ripple is excited to now be working in the EU. This is the latest news. Luxembourg advances discussions with Ripple on MiCA licensing. And this is Gillies Roth, or Roth Gillies here. And you guys can see the meeting did include Cassie Craddock there and Stuart Alderati. And I believe that's Rahul Advani as well. Gilles, I guess it's Gilles Roth, he did say great meeting with Ripple as they advance towards securing their license to operate in Luxembourg. We discussed their ambitions in Europe and Luxembourg, and I reaffirmed our commitment to digital innovation. Ashley Prosper pointing out the symbolism in this image is not lost on me. We've got water, okay? Ripple and liquidity, glass bottles for transparency, red and blue bottle caps, a uniting of the political aisles, yet it is all untouched. Just waiting for consumers, I guess, and all the silver trays. Nice touch. Also notice how no one is at the head of the table. The power is shared and not controlled by any one person or entity. Reminds me of a certain network. The Ripple Riddler continues. Maybe it's a coincidence, maybe not. Very good, an interesting observation there from Ashley Prosper. So guys, this is what happened. The events on October the 9th, 2025 mark a critical junction in Europe's digital financial architect, a visible bridge between regulatory readiness, market infrastructure maturity, and institutional onboarding. Now we know who is at the table. The timing is deliberate as MiCA is now fully operational across the bloc in Luxembourg and already the hub for funds. Digital custodians in the European Investment Bank's blockchain bond operations is positioning itself as the regulatory center for tokenized settlements and digital asset issuance. And guys, Ripple's move here is strategic. This is aligning the XRP ledger-based cross-border payment solutions with SEPA and the TIPS interoperability. So Ripple's engagement coincides with the ECB's TIPS R2025.OC. So I guess October 25 go live window. The first to support programmable payments in multi-currencies routing beginning yesterday, October the 9th, 2025. If you guys, again, are watching this video on the day that I'm releasing it. So this is laying the technical foundation for digital euro pilots. The next phase, guys, is integrating DLT settlement layers with the regulated payment fabric. I think this is set up to move very quickly. We know the November 2025 deadline for ISO 20022 is already now around the corner. This week signified the convergence of policy, infrastructure, and enterprise. Ripple's Luxembourg license effort is an anchor point within the EU's emerging digital liquidity grid, where instant payments, tokenized capital markets, and programmable central bank money merge under a common regulatory and operational standard. The next phase unfolding throughout early 2026. We will see integration of the Euro digital wallet digital Euro wallet prototypes into SEPA instant use cases, expansion of Ripple and Circle's presence in regulated EU corridors. So the EURC, XRP, and stablecoin interoperability, ECB and ESRB pilots linking tokenized securities with TIPS and target settlements. Guys, this enhanced oversight of NBFIs as digital asset funds and liquidity pools become embedded in Europe's capital market unions. So here we have just another tweet from Cassie Craddock of Ripple. It's all looking very promising. MiCA has been the first step in Europe, and Ripple's presence on the global stage is becoming increasingly important. Another good point here brought up by Laura Belgrave. Okay, it's becoming increasingly clear that XRP's presence on major centralized exchanges may be more of a constraint than a catalyst. So he's talking about XRP being traded on those retail exchanges. When an asset built for institutional liquidity is trapped in retail-driven speculative venues, price discovery becomes distorted. Well, is this going to change? Are we going to see XRP or less XRP? Let's think of that supply shock theory for a second. Is that going to affect price discovery when we do see more adoption globally for institutional grade payments? He goes on to say true value won't emerge until XRP operates primarily within the rails it was designed for, i.e. institutional settlement, cross-border flow, and on-ledger utility, not exchange order books. Well, we know Scott Bessent has already talked about the payment rails existing. We're seeing more developments in the EU under MiCA regulation. In Luxembourg specifically, this all leading to global adoption of XRP and some of the major cryptocurrencies that are going to fundamentally change payments and finance. That's just my opinion. And for more opinions on where I think the market's going to go, you guys can follow me at patreon.com/workingmoneychannel. I also wanted to mention that the Working Money Channel merch store is up and running. If you guys are so inclined to purchase some Working Money Channel merch, you guys can find the link in the description of every video. That's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.